Hello and welcome to the committee that is investigating Wall Street. This is a House committee. Pretty reasonably new video. As you can see, it was done February 18th, 2021. And this committee is an ongoing committee in the House of Representatives looking at the dealings that Wall Street does in regards to trading. We're going to be looking at three of the congressmen today and see how far along that Congress is in dealing with this problem of Wall Street and how they trade, and the enormous cost it is on the investors that happen to be retirees with their retirement funds. The first one here, the congressman will be looking at basically what happens when they have these fees that they place onto the industry there in Wall Street, and to see if perhaps this predatory practice would cease. The problem in the U.S. is that we don't focus on the particular executive of the banking industry or there in Wall Street. All we do is focus on the company, and we find the company. So by doing that, basically what happens is they feel that, they won't be prosecuted for their actions. And the profits are enormous. So they continue to do it within impunity, knowing that unlike with many other countries, when they do that type of thing, that government looks exactly at that executive and deals with them individually. But anyway, let's start off with this first one, and you can go from there and then make a decision if you feel that Wall Street is an excellent place to do business with your 401ks and IRAs.
Here's my point. Let me go to it quickly. The market maker Citadel traded over-the-counter stocks for its own accounts in 2012, from 2012 to 2014, while simultaneously delaying client orders for the same shares. And it was fine for this. Citadel has been naughty for some time. 2014, Citadel faced $800,000 in penalties. 2017, $22.6 million. 2018, $3.5 million. 2020, $97 million. And another 2020 of $700,000. This seems like a lot of money. It is for me. More than $124 million. But over the same period of time, Citadel had revenues generated in the amount of $13.2 billion. It seems to me that the punishment for these improper trades and improper actions, because it wasn't just trading, Citadel also did some other things that were not proper. They messed with their clients. Seems that the punishment is so small, given the amount of revenue generated over the same period of time. It seems that Citadel has at least an opportunity to build into its cost of doing business paying penalties. And that concerns me. It concerns me that the punishment doesn't seem to deter Citadel. It concerns me because I know of circumstances where in persons who are not in the market, they do things that are much less harmful, and they can possibly go to jail.
Okay, so basically what he is saying is, by not focusing on the individuals that are committing these crimes of insider trading, shorting the markets on the stocks and the mutual fund portfolios Basically, by doing this, what happens is that they can get away with it, whereas the regular individual cannot. So an outside trader not part of Wall Street, they'll be penalized by SEC criminal charges, but those inside, they've got a get out of jail free card. Let's move forward.
At Robinhood.com or on our app for support. If you have an urgent trading need, please make sure to include details of your order when reaching out. Thanks and have a great day.
As we all know, the wealthiest 10% own 84% of all stocks. In fact, 50% of American families own no stock at all. I say this to emphasize that to many of my residents, the stock market is simply a casino for the rich whose gambling hurts pension and retirement funds. And when you all screw up, the people end up paying the tab through losses or bailouts. So I want to talk about the high frequency trading. We know about half of all stock trading in the U.S. is done by computers. They analyze market activity and instantly complete trades at a profit. So this high frequency trading allows Wall Street traders to get ahead of transactions done by pension accounts and retirement funds. So in effect, some estimates indicate that as a result of the high frequency trading, though, pension and retirement accounts pay nearly $5 billion in a tax. This means that Wall Street firms like yours engaging in high frequency trades are actually making money at the expense of my residents' retirement funds. So one way to ensure that this enormous wealth generated on Wall Street actually reaches the real economy, y'all, what's happening right here in our communities and in my district, is to enact and look at proposals like a financial transaction tax. And let me tell you, according to recent polling, the majority of Americans, all of you need to hear this, and it's going to grow, the majority of Americans support taxing Wall Street transactions. Taxing them at just 0.1% would actually raise $800 billion over 10 years, which could fund programs like helping my district expand healthcare, nutrition, public education. I heard my friend from Texas, who we all are praying all the families will be taken care of, talk about access to water and electricity. But guess what? Right now in my community, it's so poor that I have families melting snow so they can flush their toilets because they have no access to water. So this tax to me would discourage risky and high frequency trading, unfair high frequency trading.
Okay. As we move forward to this last representative from California, he's asking why they set up the trades so that they can get in front of these retirement accounts. Basically, these retirement accounts are just sitting idle, or as I say, parked. These people putting money into it, they're constantly putting money into it, and they feel that, hey, I'm going to make money with it. And sadly, everyone but them makes money with it. The financial planners make money with it. These traders, this company owner that you will see in a minute that handles a hedge fund, they're all making money off of these portfolios. So my point here is, maybe it's time for you to make some money too. And the only way you're going to really be able to do this is not be dealing with 401ks and IRAs. But let's move forward.
SEC rules require that people get the best execution. But I've recently learned that there's best execution and enhanced pricing. So if you get an order from Fidelity and you get an order from Robinhood and you're paying for the Robinhood order flow, is the Robinhood customer getting as good a price as the Fidelity customer?
As I was trying to explain, because the Robinhood order comes from a community of traders who tend to trade in smaller size.
That isn't my question, sir. You're evading my question by making up other questions. Let me repeat. 2 identical orders come in. Same stock, same quantity. One's from Robinhood, one's from Fidelity. What happens?
So, as I said earlier, size of the order is only one factor.
You are doing a great job of wasting my time. If you're going to filibuster, you should run for the Senate. Everyone else I've talked to in this industry says when you pay for order flow, you get when your broker is being paid for order flow, you get a worse execution.
See, that's a lot.
So basically, the ones that are paying for the order flow, that are getting the better execution, those are the high rollers. Those are your elite. Those are your 0.1/10 of 1% that own the stocks and own those platforms and own the majority of it. They're the ones swaying the market. And they're looking at your money and saying, look at all this money just sitting here. Wonder what we're going to do with these stocks. And they short them. So in essence, you need to seriously consider when you're investing, and you want to go long term, you need to get types of investments that aren't affected by these market downturns that they are basically creating. We can help you with that at InStar Alliance. We have different types of investments that work outside of the S&P and markets that are being rigged. And from there, you can possibly get a good return. Most of these indexes are global indexes. They are in Europe, they're in Asia, they're in Japan. They're in markets where if these types of trades are done, these people are held accountable. So that way you can get a fair spread on the investment that you've made. They can be pre-tax funds as well. Also, too, you can also do tax-free withdrawals from them. So these are thoughts to think about. You can see the market volatility, and you can see the characters who are creating it, and you can see what the Congress is doing to try to change these problems. But until we get to the heart of the problem, which is dealing with people like this person in front of us here, we're always going to have issues. Anyway, thank you for your time.